Hello, it's Ashley again from the Trade Circle. Hope you're having a good weekend. Just a quick overview on one of the trades I took from last week's hot list. Now, this one is where I shorted gold. Now, I didn't really discuss this too much last week because it wasn't, although it was on the hot list, it kind of faded away and then very quickly came back on to my radar. So just to walk you through, basically, I was looking for rejection. I'm not going to move these actually. I was looking for rejection from my area of interest, which is identified by this green zone here. The way I work my area of interest out is to go on the higher time frames, daily, weekly, monthly. Each trade's different, and all I'm looking for is, if I look to the left, so as we had broken out of these areas, if you look to the left, you will see areas of resistance. Now this is on the monthly. If I just go in on the weekly, it's probably easier. There we go. So if you look to the left here, it correlates to the right on this side here. So I take into account any price rejection that's local, and I correlate that with areas of support and resistance on the weekly and daily time frame. So sorry, I had a few technical issues there. So that's how this came back into my hot list. So we got this quite aggressive move back up. Now, we had non-farm data last week on Friday, so we did, and gold especially is volatile on the best of days. So leading into non-farm, I'll give you an example of what could have happened if non-farm had produced some bad results, as in the data was weak. Gold would have continued long, very, very likely continued. So buyers would have continued purchasing this commodity, and the price would have increased. Very likely to do that. But because non-farm data was strong, what we got is an initial pullback. This is highlighted by this bar here. So for me, I saw this opportunity here, this rejection from this candle, which was lower than these rejections here, as a speculative move. Sometimes the market just knows what's going to happen, and it does always bewilder me how the price of a commodity or a symbol seems to touch the area that it wants to sell or buy from just as the news is coming out. So if you think about this, the price of gold increased not because they wanted to continue buying it, because they wanted to get the best price to short it off the back of non-farm data. So that's exactly what I did. That doesn't always work out like this, Don't think that I'm like the god of all traders. All I do is trade what I see, based on the experience and knowledge that I've got over 13 years, and I've homed in on this, and I've stopped making those daft mistakes that I used to when I was an amateur trader. And you can see this in these screenshots. So if I just drill in on the lower time frame first of all, just so you've got the right. I'm having such technical issues today. It's quite frustrating. So I've cleaned my charts up since that trade was taken. But if we go back to these screenshots, just move that one out of the way for now. Right, there we go. So if I zoom in on here, you can see this 30-minute candle. Yeah. So for me, this evening star formation here was the perfect opportunity to get involved leading into the news, which was 2 days away, and have a very tight stop. You want a tight stop where possible with gold because, it does move quite some. So it's very difficult to get a handle on that trade. So if you can get a tight stop of say 50 to 70 to 100 pips, which is a tight stop for gold, you know, you've got a very good risk to reward factor. So it's best to just take a step back with gold, do your planning properly, and be very patient with the right setups. Because if you play gold or oil for that matter with, you know, very tight risk parameters, then, you know, you can get a 10, 20, even 30 to 1 risk ratios. But you have to plan your trade out, you have to set your alerts, and you have to understand when the fundamentals are likely to cause problems. And if you can get a tight stop, brilliant. And that was just one of those days for me with oil. As you can see, it's not a very good screenshot because I did this one on my phone, where the red line and the green line touch here is where my entry point was. It's a bit better on this one. And this is the trade after the event. So you can see this pattern here, the evening star and the rejection. So that was my entry just there, absolutely perfect. Stop loss just above the high of this, so 70.7 pips. And as you can see, I got the right price. I didn't go to break even. I left this. Sometimes I go to break even, but on this occasion, with it just being 70 pips and 1% risk, then for me, I wanted to give this room to be a little bit jittery leading into the news. And on this occasion, it was nice and calm. A few spikes up, and then bang, straight out. Absolutely perfect. So anyway, that's gold. I hope you enjoyed this video. Feel free to connect with me on thetraderscircle.com. If you want to send me any comments, then feel free to do so. And don't forget to like and share. I'll speak to you in the next video.